Welcome everyone to the Grand Thornton webinar around ViDA, VAT in the digital age. I think you all might have already heard of it. It's one of the big talks currently in the VAT universe. And throughout this webinar, we will tell you all about the implications that are known so far. My name is Melvin Chandu. I'm Senior VAT Consultant at Grand Thornton. I'm here together with Robert Jan Bredhauer and Igraine Post. Before we continue with their introduction, some house rules. This webinar will be recorded, so you can view it afterwards. As you can see on your screen, in case there are any questions, feel free to ask them. We will try to discuss these questions during the webinar. In case we cannot do that, we will send you a Q&A afterwards, where we try to answer your questions as best as possible. Also, like I told you, the webinar will be recorded, so you can view it afterwards. Before we go ahead with the agenda, I want to introduce my colleagues. Robert Jan, tell me more about yourself.
Yes, thank you, Melvin. My name is Robert Jan Bredhauer. I'm the indirect tax partner at Grand Thornton in the Netherlands. I've been working here for almost 12.5 years. In our practice, with a team of around 18 people, we advise national and international clients in respect of indirect taxes, customs, and also dealing with EU-wide pan-European VAT compliance projects.
Yes.
And today I'm here to tell you a little bit more about ViDA.
Thank you. And on my left side.
Yes, thank you for the introduction, Melvin. So my name is Igraine Post. I'm a senior consultant in indirect tax, and I'm part of the team of Robert Jan. And I think that the ViDA proposal is really interesting because it takes full advantage of all the technological and digital advances to create an updated EU VAT system.
All right. Well, thank you both for the introduction. And what's on the schedule today? We will discuss the key points of ViDA, the digital reporting requirements that are being introduced, the extension of the one-stop shop, and of course the implications for the platform and e-commerce that are yet to be introduced. It's quite a lot of information. It's also introduced in the next coming years. So we have also created a timeline for all of you, so you have a better understanding on what's coming first and what steps need to be taken already. Of course, since the proposal is from December last year, there has been some input from different branch organizations and some countries already. We will also discuss these. And lastly, and one of the most important things, how to make sure that you're ready. So, Robert Jan, can you tell me more about the first point, the digital reporting? What can we expect?
Yeah, sure. So, like you already explained, the ViDA proposal consists in 3 different topics. Quite extensive topics, a lot of changes. And before we dive a little bit deeper into those topics, it may be good to explain a little bit more about the past and the reason why the European Commission is going to introduce these kind of topics. So I think we have to go back to 1993, the moment where the European borders were opened and we got one EU common market. At that time, we got the intercommunity supply of goods system, the zero-rated intercommunity supplies of goods, which at that time was a sort of temporary measure. It was never expected that now, 30 years later, we still have the same scheme, the same model with the application of the 0% VAT rate. A couple of years ago, there were already some plans of the European Commission in 2018, where they were introducing some ideas about changing that subject. And they were thinking about to tax those intercommunity supplies of goods in the member state of consumption. So abolish the 0% VAT rate, but having to report the VAT in a country of consumption. And preferably in a sort of one-stop shop regime where you could report and remit that VAT. It's quite silent from the European Commission in the last couple of years about that. I think VAT people listening, the certified taxable person principle. I have not heard any more about it the last few years. But it is possible that this will be introduced also, with these kind of new proposals of ViDA, and that some amendments will be made in that respect as well. So that's one of the reasons to modernize, of course, the current VAT system. But also one of the big reasons is we still experience a quite big VAT gap. It was 96 billion euros, which is a lot of money. And the VAT gap is, in principle, the difference between the VAT the member states receive in the treasury and the VAT which they expect based on statistics and the economy. And then the difference of 96 billion euros is quite a substantial amount, as you can imagine. And they will try to reduce that VAT gap by implementing this new legislation, because it's becoming more and more difficult to remit and report less VAT than before. And also the possibility of fraudulent transactions will be decreased quite significantly. Another reason is that, of course, the European Commission noticed that the last couple of years, many EU member states already started to introduce a digital reporting system or an e-invoicing system, even with pre-clearance systems, so that even invoices had to be sent first to the tax authorities before they could be issued to the customer. And each member state had their own rules, their own compliance legislation, their own VAT returns, their own deadlines, especially companies in the current economic environment where international doing business is getting more important and more usual. Everyone, even with your laptop, can do international business if you, for example, are a dropshipper. So that's many companies are dealing with these kind of legislation. And you want to, of course, avoid that companies have a quite high administrative burden because they have to comply and deal with legislation in multiple countries. The digital reporting requirement in Italy is completely different than in Hungary or in Spain. There are some countries like Belgium and France which will introduce a similar scheme in 2024. And at the end, no one exactly knows what you have to do to be compliant. So it's good that the European Commission stated, okay, we want to go to one common EU system in which we use digital reporting as a way to report certain data. So that's going to be quite a change and a difference in that respect. So it consists in three different topics. First, of course, the digital reporting requirement and the e-invoicing. Those steps are already starting in 2024. Then the extension of the one-stop shop, and also the extension of the rules for platforms. Now, let's start with a poll question. I think it's good to know of all the participants of this webinar to check whether you yourself or your company is already dealing with an e-invoicing or digital reporting requirement in a different EU jurisdiction. And an answer, of course, as good as possible, whether you are dealing with that and are compliant, that you're dealing with that, but due to administrative burden or some other complexities, you want to be compliant, but you are not fully compliant yet. That you don't have any digital requirement, of that you do not know whether you have that kind of requirement. And it's good to see also for the other participants to have an idea how many companies are already dealing with this kind of subjects, or whether it's completely new for you. So we will of course have to wait on the outcome of that poll. Exactly. If it won't come up, of course, on your screen, then we can discuss that as well. I personally expect that if you are dealing with businesses which are already doing a lot of international business, there are already these kind of requirements in 14 different EU member states, that there is a significant chance that companies are really dealing with this kind of requirements.
Yeah. So the results came in. Actually, 43%, like almost half of everyone that voted, says no. But
Okay.
there are still 14% yes, but not fully compliant, and yes, and I am compliant. So that's like a third of all people that voted on this
Okay,
poll.
already dealing with that, but
Yeah.
the most of the companies state that they are not dealing yet with these kind of requirements.
Yes.
Okay, that's at least a good thing, especially of course if you are, for example, a Dutch-based company. Yeah, the Netherlands or Dutch tax authorities, they never thought, maybe they thought about it, but they did not introduce the last couple of years, or at least show the intention to enforce a similar digital reporting requirement in the Netherlands. So that's quite common. So yeah, that's a good thing, which also means that if more than 48%, 43% stated no, that these kind of requirements will be completely new for those companies. So it's good to already get a feeling about what this will entail for those companies.
Exactly.
So I want to start with the first topic, and that's the digital reporting requirements and the e-invoicing requirements. So the first changes are already taking place as of 2024. It's now already April, so less than 9 months to go. Of course, the legislation needs to be enforced, will need to be put in law. It's not at this stage, it's still a plan, but 2024 is going to be the initial plan date to change that. So at this moment, it's of course already possible to issue electronic invoices. And usually those electronic invoices are PDF versions which are sent by email or via your own bookkeeping system or sales system. At this stage, it is already possible to issue electronic invoices, but only if the recipient of the invoice accepts that. And that will change. So in the plan, that as of 2024, the electronic invoice will be the standard way. So you do not longer need any acceptance of the recipient of the invoice in order to issue an electronic invoice. And if we talk about an electronic invoice, a new definition will come up as of next year, which in principle means that, and it's also the intention, of course, working to 2028, that the electronic invoice should be an XML invoice containing all the data which is now stated on an invoice, but then in XML version, and that you have software or capabilities to issue those kind of invoices, but of course also to receive those kind of invoices. They should comply with a certain EU standard. That's the EN 16931 standard. It's currently already used for B2G transactions, so business to government transactions. In many countries, it's already obligatory to issue XML invoices to governments if you provide any activities to those recipients. Those invoices need to be delivered by electronic means based on the PEPL principle. There are a couple of ways introduced the last couple of years how to make that e-delivery happen, and they have chosen for the PEPL. And like I already stated, the data which is currently, or as of 2024, is required is still, let's say, the invoice requirements which are applicable also at this moment, but additional data will be required in 2028. And then we should think about, let's say, the IBAN number, or indeed bank account details, IBAN number, and also the reference to the initial invoice if you are going to correct the invoice. For me personally, that's not a real new element. You already have to state a reference to the initial issued invoice if you issue a credit invoice, but also more in general, if you are going to correct invoices, you have to make a notion to that data element as well, but based on the plans, only as of 2028. But many questions will still remain open. So what if we have more data elements? If we want to add that, do we have to remove that? Can we add that? And of course, the electronic invoices, they can be issued by the company itself, or they can ask a third party to do it on their behalf.
Yeah. The interesting part that you stated about the data, the IBAN. I mean, there are a lot of traders currently in the European Union which cannot or do not have an IBAN number. I mean, because of all the rules, it's quite difficult for a company to obtain an IBAN. So it's interesting that the European Commission has decided to implement the IBAN to be mandatory. I mean,
yeah, definitely. It almost seems to be that that they forget that there are also non-EU companies doing business in Europe. But yeah, if you read in the literature about that subject, I expect, or it seems that they use the term IBAN, but they in fact mean more in general the bank account details.
Yeah.
And I really hope that they will make that change, or at least provide the clearance and certainty that as of 2028, when that data element is required, that in general your bank account details are sufficient. So if you have a US bank account and you want to receive a payment on that bank account, that you can simply provide a bank account number or sort code of the bank, which of course is quite a different method than an IBAN.
Yeah, exactly.
So I can imagine that they will make those changes, especially like you stated, it's almost impossible for non-established companies to obtain a European IBAN number at this stage with increased legislation, know your client acceptance procedures for also for banks.
Yeah, exactly.
So then in 2024, the first steps will be taken, and then in 2028, the introduction of the digital reporting requirement will be taking place. And that means that two kind of transactions will be covered on that. So that's let's say the cross-border supplies of goods and services, so the intercommunity supplies of goods, and the B2B standard reverse charge services, like we know them at this stage. So the services and goods which you currently report in your EC sales listing or your V statement or the recapitulative statement, like we know in the many different EU member states. But also the domestic transactions, which will be subject to the reverse charge. That will be expanded a little bit more as well, which will be discussed a little bit later on. But also that type of transactions will have to be reported in the digital reporting requirement as of 2028. It's going to be a sort of near real-time reporting system. You have to provide the data 2 days after issuing the invoice, or after 2 days that the invoice had to be issued, if the invoice is not issued before that. It means that the seller or the service provider needs to report this from the sales invoice perspective, but also the purchaser or the service recipient needs to report this, and as they will treat the invoice as a purchase invoice. So in that way, the EU member states can link each sales invoice to a purchase invoice and check also at that same time whether you have reported, for example, the VAT, which can be reclaimed by the recipient.
Yeah.
So the idea is that at that stage, it is much more difficult to, let's say, report VAT but not remit it, or reclaim VAT which you never paid and also are not willing to pay. One of the downsides, personally, of the system is because it is transaction-based, each single transaction needs to be reported. It's no longer possible to issue any summary invoices. Many companies are used to the fact that they can save all the transactions in a particular month and issue one invoice per month, or issue one credit invoice where you make note to various incorrect sales invoices. But that's will not longer be possible as of 2028, because you have to report the transactions based on the transaction and not per se on the invoice.
Yeah.
So there will be quite an adjustment for those companies, and they'll have to change their way of working.
Yeah, it's getting a little bit more difficult dealing with that. It's a slight increase in the administrative burden for those type of companies who are used to issue summary invoices.
Yeah, companies like power suppliers, they do that quite often.
Yeah.
Yeah, those summary invoices. So yeah. Well, Robert-Jan, thank you for providing us with some input on what DRR entails. So I will look to my left to Igraine, and she will tell us about the one-stop shop. And does this mean that that there will be one VAT number for future reference in the EU?
So that's not the case, but the goal is from the European Commission that companies will need only one EU VAT registration to do business within the entire EU. So that's the goal. However, we're not there yet, but we're making great steps towards that goal. So we have seen in July 2021 that the one-stop shop, the OSS, has been introduced and has been proven to be really successful. We noticed, for example, that a lot of our clients, they could deregister for VAT in member states where they were registered for VAT because those transactions are now covered by the OSS. So they can report the VAT due in those member states now in one single OS return in the member state where they registered for the OSS. So that's great. And now they just have less circumstances under which a company will have to register for VAT in another EU member state just to perform a transaction. And the European Commission, they want to build on this success. They want to build on the success of the OSS by expanding the scope of it, meaning that more transactions will now be covered by the OSS. So currently, the distance sales of goods and electronic supplies of services to private individuals and non-VAT registered companies are covered by the OSS. And in the future, from 2025 onwards, also all B2C supplies of services provided by a supplier who's not established in the member state and also not VAT registered in the member state will be covered by the OSS. And also all domestic supplies of goods, B2C supplies of goods, will be covered by the OSS if the place of consumption is in a member state where that supplier is not registered for VAT and not established. And besides that, also certain B2B supplies will now be covered by the OSS. And it concerns the supplies of goods with installation, the supplies of goods on board of a boat, aircraft or train, supplies of goods of gas, electricity, heating and cooling, and also the supplies of margin scheme goods. So yeah, what all these supplies have in common is that the place of taxation is usually in a member state where the supplier is not established. So if these transactions are not covered, not established and also not VAT registered, so if these transactions are not covered by the OSS, then the supplier would have to register for VAT in another EU member state. And yeah, companies having to deal with multiple EU VAT registrations in different member states is really one of the biggest pain points that companies have. So it's really welcomed that now more transactions will be covered by the OSS and there will be less circumstances under which they will have to register for VAT in another EU member state just to perform a transaction. So yeah, they're moving towards having only one EU VAT registration in the Netherlands to do business, but we're not there yet.
Yeah, what I find interesting is that they excluded the sale of events on a business-to-business basis. I mean, after the COVID restrictions ceased, we noticed that quite a lot of companies are organizing events again in different EU member states, which often require them to register there to either report and reclaim the VAT in those countries. So it would be a welcome adjustment, I think, if they also were able to make use of the OSS in that regard.
It will definitely be a welcomed adjustment, since now we see that not all B2B supplies are covered. So you have this strange situation that if a company, let's say we take a Dutch company, if they host an event in Germany, so another EU member state, and the attendees of that event are non-VAT registered companies and private individuals, then the VAT due on the ticket prices can be reported under the OSS, so in the Netherlands. So the Dutch company would not have to register for VAT in Germany. But as soon as that exact same company hosts the exact same event in Germany, but then the attendees of that event are VAT registered companies, then the company would have to register in Germany just to perform that transaction because it's not covered by the OSS. So yeah, it will be really welcomed by businesses if also in these kind of transactions also will be covered by the OSS and just more transactions, because it seems like the European Commission focused more on the supplies of goods than the supplies of services.
Right.
Yeah, definitely more general would be very welcome. General rule that more and more B2B supplies would be added as well.
Yeah.
Yeah. And are there also any expectations to recover VAT via the OSS? I mean, we've received several requests whether that is possible, but currently, yeah. It's not not possible yet. Are there any updates in that regard?
There are no updates, unfortunately. So yeah, currently it's not possible. So if a company chooses to use the OSS, then they will have to deal with two separate processes. One process to report to the VAT due, so they will do that through the OSS, and they have to deal with another process to request the VAT refund, and they will have to do that through the EU VAT refund request. But that can take quite some while. We learned from our experience.
Yeah, exactly.
So yeah, so in some situations it can be better to just register for VAT in a certain member state just to avoid a cash flow disadvantage.
Yeah, for me, it's still strange talking about the subject of reclaiming the VAT, that indeed the OS has been created to report and remit your sales VAT, so your output VAT. But if you want to register for the one-stop shop, you cannot register without providing the tax authorities with an IBAN number.
Exactly, yeah.
So why do they need an IBAN number if they are not never going to reclaim any VAT, and you only have to pay the VAT, and it's not even obliged to pay that VAT from that IBAN number, which you have to provide to register.
Yeah.
So it's still so strange for me personally,
Yeah,
that you have to provide that kind of information while they don't do anything with that. At least I cannot imagine why they need that information.
Yeah.
But okay, they want it.
They don't even allow you to finalize the OS registration without such
No,
a number.
no,
So
yeah.
even if you have another bank account. Right. So Igraine, what can you tell us more about the transfer of own goods?
Yes, of course. So the transfer of stock of own goods, it's currently not covered by the OSS. And therefore, if a company transfers their stock to another EU member state, then they often will have to register for VAT. And yeah, I say often because it's not always the case, because in certain cases, a company can make use of the so-called call of stock simplification. But to make use of this simplification, a lot of criteria must be met. For example, the customer must be known already, and of course that's not always the case. So therefore it's really handy that those transactions also will be covered by the OSS, because currently, let's say we have a Dutch flour company, and that Dutch flour company has customers in different EU member states, let's say Belgium and France. If they want to sell fast to those customers, then they will have to hold stock abroad. But if they do so, then they will have to register for VAT if they cannot make use of the so-called call of stock simplification. And yeah, so they have to register, and that is of course really burdensome for the company, because then they will have the administrative burden and also the compliance cost. So it's really welcomed by businesses that these type of transactions now will always also be covered by the OSS, so they don't have to register for VAT just because they want to hold stock abroad.
Yeah, and this is of course one of the biggest issue in the e-commerce world. Many companies making sales using Amazon FBA, fulfillment by Amazon, where the products are owned by the supplier of the goods, the seller, but they are stored at an Amazon warehouse. And Amazon can transport that inventory, which is owned by the supplier, to each member state where they have a warehouse, or even outside the EU if you make use of the UK.
Yeah.
And that is one of the biggest issues which those companies have and have to deal with it, because officially they are obliged at this stage still to register in all those member states, which is a significant administrative burden for those companies. And often the companies can start rather small with only a few products, but want to sell it across Europe. Maybe even one or two persons who owning the company or dealing with the company, but they have to invest quite some funds and money in order to at least be compliant for VAT. This is definitely a great thing that they are going to be changing, because this will make the e-commerce landscape much easier. It will be even more accessible than at this stage.
Yeah. And Igraine, how would such an internal transaction be reported?
So it's not needed to send any type of invoice, but it does have to be reported under the OSS, and just a lot of details have to be provided about the transfer, like the transfer, the value of the transfer, for example.
Okay.
And we have another great measure which will be implemented. and that's the domestic reverse charge mechanism. It will become mandatory for B2B supplies where the supplier is not VAT registered and established in the member state where the supply takes place, but the customer is. So yeah, let's take first a step back. What is it? The domestic reverse charge mechanism. So in the Netherlands, we already have it in place because it's optional. And if you have, let's say, a German supplier and a Dutch company, and the German supplier provides a service to the Dutch company, then this service can be taxable in the Netherlands, and therefore the Dutch company would have to register in the Netherlands to perform this transaction. But luckily, we have the so-called domestic reverse charge mechanism, and therefore the liability to account for VAT will be shifted from the German supplier to the Dutch company, and therefore the German supplier will no longer have to register in the Netherlands just to perform that transaction, but the Dutch customer will just report the VAT due in their VAT return, and they can also deduct the VAT if they have the right to deduct, of course, in that same VAT return. So it's really a great mechanism, and it's great that it will now become more harmonized, because now currently about half of all the member states have implemented the domestic reverse charge mechanism, but they all have really different conditions. So it makes it really hard for a business, if they do a business abroad, to be compliant. And it's also not mandatory. So yeah, it's great that it will become mandatory and more harmonized to avoid additional VAT registrations in other EU member states.
Yes, I agree. It provides more certainty to all the taxpayers. Yeah, great.
And they have to be reported. They have to be reported under the EU DR, under the EU sales listing from 2025 onward, and then from 2028 onwards under the EU DRR.
Right.
Yeah.
Yeah, and the domestic reverse charge will be even more accessible than at this stage. Like in the Netherlands, what you explained, the current condition, which is all quite beneficial, is that if a non-established entity provides a service or supply of goods to a Dutch established company, the reverse charges mechanism is applicable. While as of 2025, because that's the moment when this will be introduced, they will look at the fact whether the customer is even VAT registered. So you don't even have to be established anymore.
Yeah.
And like you stated, yeah, in many different EU member states, it is explained differently. Like in Germany, they have a domestic reverse charge mechanism, but only for services and for werkinvoeringen. In Belgium, it's also different. It depends, for example, whether the customer has appointed a fiscal representative, yes or no, even if it is not established. So this is also a very good change, in my opinion, that it will be harmonized and even more easily accessible for companies.
Yeah, exactly.
Did you? I think did you receive a question?
Yes, we will receive a question, but I think that will be discussed in when we talk about the platforms.
Okay.
Yeah. So I think that's a great bridge back to you,
Yeah.
Robert-Jan.
That is fine.
Yeah.
So yeah, the third and the final topic of this proposal is also that the platform fiction will be extended. Also, since July 2021, when the one-stop shop was introduced, also the platform fiction was introduced, and based on certain conditions, the platform became liable to remit and report the VAT on behalf of the actual supplier. That was a good thing, of course, for the small suppliers, because they don't have to even register for the one-stop shop, and the platform had to remit that VAT. So that's a good thing for the suppliers, the companies. But it's also positive, of course, for the tax authorities, because they don't have to deal with millions of relatively small VAT entrepreneurs checking whether you have remitted the VAT, but they simply could check the platforms, whether they complied with the legislation. So also now there is already a platform fiction, but it will be extended. And it will be extended in two different ways. So it will be extended for the rental of accommodation, and also for passenger transport. So if you think about companies like Airbnb or Belvilla for the accommodation, and companies like Snapcar for the rental of cars. The second extension of the platform fiction is also for the selling of goods. So also in more situation than now, the sale of goods will be responsibility for the platform to remit the VAT. And also there was some uncertainty at this stage about the actually services performed by platforms. So platforms perform some facilitation services, and some member states, they qualify this kind of service as electronically supplied services. And other countries, other member states didn't state it was a different VAT treatment for that kind of services. That will be harmonized. So as of 2025, it will state that the place of supply of the facilitation service will follow that from the underlying transaction, sort of a commissionaire function or undisclosed agent. So the first change in respect of the platform is for the passenger transport and accommodation. That's of course also a good change in my opinion, because at this stage, if you are going to an hotel or you rent a car from a professional car rental agency, you have to pay VAT. Often in the country where the rental car was given yourself in possession, or at the place where the accommodation is stated. But a lot of owners of buildings or owners of cars which make use of a platform to make their accommodation available for other persons, and also for their cars, is that no VAT is paid because they are not a VAT registered entrepreneur. And that is of course in contradiction also, not honest if you make a reference with hotels. So as of 2025, they will amend and increase the platform fiction, that also those kind of transactions will be taxable on the responsibility of the platform and not longer of the supplier. This is only the case if the owner or the supplier of the service is a non-VAT registered entity or private person, or there's another reason why you are not VAT registered. For example, if you fall under the scope of a small entrepreneur scheme domestically. In that situation where you also even could not charge any VAT on the transaction, then the platform becomes liable to remit that VAT. So it's a win-win situation, more VAT, and also an easier access for tax authorities to enforce the remittance of VAT from platforms.
I can imagine that a platform, if they become liable to pay the VAT, if the underlying supplier is not registered for VAT, that they easily just make it mandatory that suppliers who want to make use of their platform just have to register for VAT before they can sell anything through their platform.
Yeah, that is one of the outcome, of course, of this model. At this stage, platforms were not that strict. They were happy that they have more accommodation or cars on their platform because they can earn some money from that. But it will now mean that they will have an increase of responsibilities. And if there's a way to avoid that responsibility by only allowing VAT-registered suppliers, then the platform fiction is not applicable. So that's a good thing. I think that platforms will. There is a big significant chance that they will enforce this kind of legislation onto the supplier. You are not allowed to put your accommodation on your car on my platform unless you are VAT registered. So for VAT in that situation, two transactions take place, because you have a transaction between, let's say, the owner of the accommodation and the platform, and one transaction between the platform and the customer. Yeah. And of course, only one transaction can be taxable for VAT, which means that the first transaction is going to be VAT exempt, so zero rated or outside of scope of VAT, and the second transaction is becoming the taxable transaction, meaning that the platform has to remit the VAT. The strange thing, of course, is that if the first transaction is VAT exempt, then and the second one is VAT taxable, you would state, okay, if the second transaction is a taxable transaction, then the platform should have a right to reclaim any input VAT relating to costs directly attributable to that transaction, the taxable transaction. But that's not not the case. So that's completely different than our current VAT system, where if you have taxable transactions, you have a right to reclaim input VAT. Well, in this situation, even that the transaction is, okay, by fiction taxable, you will not have a right to reclaim any input VAT relating to costs directly attributable to the fictitious taxable transaction by the platform. And further, it's good to know that there will be a definement of the term short-term rental of accommodation, and it's going to be the uninterrupted rental of an accommodation for a maximum of 45 days. At this moment, many countries can have different amount of days in order to qualify still as a short-term rental of accommodation. I think in the Netherlands it's 3 or 6 months, or even more than 45 days. But okay, that's going to be also harmonized as well. Then, in respect of the supply of goods, so at this moment, the platform fiction will be applicable if a non-EU established entity makes sales to private individuals where the products are shipped from a warehouse in the EU. If you are EU established and you ship those products out of an European warehouse, at this moment you don't have to apply the platform fiction. That will change as of 2025. Also in a situation where an EU supplier, so an EU established supplier, will make so-called distance sales to private individuals in all the EU member states where the goods are supplied from an EU warehouse, the platform fiction is becoming applicable. That's also quite a change. So platforms will, the responsibility of platforms will definitely increase during the next years. Another positive outcome, further on what you already stated about the transfer of own goods, is that as of 2025, the platform in that situation will also become liable to report the movement of own goods. So while we even before stated you don't have to be registered anymore in order to report the movement of own goods, you can report an OS return. If the platform fiction is applicable, then the platform becomes liable to report the movement of own goods in the one-stop shop return. So it's definitely a decrease of compliance obligations of suppliers, owners of goods, and it will be an increase of the administrative burden and the compliance obligations of these platforms. And then finally, in respect of the import scheme, so we have the import scheme also now, where goods are transported, shipped from a non-EU country to a private individual in the European Union. That's now an option to apply for platforms to make use of the import one-stop shop. But as of 2025, it becomes obligatory for platforms to make use of the import one-stop shop. The only exception in that case is that if the platform is solely doing business in one EU member state, so there's no intra-EU or cross-border transactions, a platform is only available to assist or facilitate domestic transactions, then the platform fiction is not applicable. But in the most common usage, like the platforms like Amazon, it's always internationally focused. So in that result, platform fiction becomes applicable, of course, if the conditions are fulfilled in that respect.
Well, those are quite some an impact for the platforms.
Yeah, definitely. Yeah. So I don't know whether what I discussed answered the question which you received about the platform, or else we can
maybe just to
try to answer that. But
yeah, just to confirm it for the audience, the question was, is the scope of the Dutch tax authorities to implement? Oh, my bad. Does the VAT collect like Bol and Amazon?
Yeah. So if the conditions are fulfilled, so again, it's they're doing this on behalf of private individuals, non-VAT registered companies. Then the platform becomes applicable. That is in respect of the rental of accommodation and passenger transport. But if the platform fiction becomes applicable for, let's say, the distance sales of goods, then indeed the platform becomes liable to remit that VAT.
Right.
Yeah.
Wow, guys, that's quite an impact from ViDA that we can expect.
Yeah, our work will completely change in the next couple of years.
Yeah.
And we have to be ready for that, of course. But yeah, many companies will have to be ready for that, because this is definitely the biggest VAT change I can remember. I'm now 30. I'm 37. I also was already a VAT advisor in 2010 when the change of the place of supply of services rules changed.
Right.
Of course, we got Brexit. We got the introduction of the one-stop shop in 2021. But this will be a completely different cookie.
Yeah, exactly. So yeah, I think we have given you quite an overview about what we can expect from ViDA. We of course have the digital reporting that will be introduced. I think it's one of the first measures that will be introduced where companies need to prepare themselves for, and also software developers and quite a lot of parties involved. We of course have the extension of the one-stop shop, which is actually something that's quite welcome. I mean, it would avoid quite some administrative burdens for several companies currently needing to have to register in several EU countries. Hopefully, it will be expanded a lot more, but that's something which we'll have to wait. And of course, for the platforms, also quite a major impact. Especially when DOC 7 is being introduced, which also provides with quite some additional obligations. So maybe it's safe to say it's not a good time to be a platform from a VAT point of view.
No, everyone is choosing the easy way and limited the amount of companies or people involved to get the VAT from. So let's change it and make the platform responsible.
Yeah, exactly. Yeah. So because it's quite some information, there are quite some deadlines involved currently in the ViDA proposal. We took the liberty and created a timeline for you all, so you know what you can expect first, what to prioritize first from a ViDA point of view. Because 2024 is actually right around the corner, and this will provide you with a better understanding. Before we continue to Igraine, who will provide you with a timeline, there have been some other questions asked by the audience as well. I decided to wait for a moment to discuss these questions because some were already introduced, but just to confirm it for you guys at home. One of the questions is in the scope of the Dutch tax authorities to implement this for all entities that are currently like BVs, NVs? Do they distinguish in legal?
Each VAT entrepreneur, so whether you are a self-employed person or whether you are doing it from a partnership level or from a BV or an NV, if you are performing, if we are talking about the DRR, of course, in e-invoicing, as long as the company provides cross-border supplies of goods or the cross-border supply of services, or will have transactions which will be taxable in a different country and a domestic reverse charge mechanism becomes applicable, then that company needs to be comply with the DRR and the e-invoicing requirements.
Right. All right. Yeah. Well, thank you. So, Igraine, can you tell us about the promised timeline for ViDA?
Yes. So, luckily for businesses, but also for us, all these rules will not be implemented at once. So in 2024, the focus will be on e-invoicing. 4 main measures will be implemented. So firstly, electronic invoices will no longer be subject to the acceptance of the recipient, like Robert-Jan already explained. So if a supplier has to send an electronic invoice, they can send it even though the recipient cannot read it. Secondly, for electronic invoices, there will be a new definition. So sending a PDF by electronic means will no longer be considered sending an invoice. And thirdly, if a country already has an e-invoicing system in place, they have to make sure that it's in line with the EN standard. And lastly, if a member state now has a pre-clearance system in place, meaning that an invoice first has to be sent to the tax authorities and be approved by the tax authorities before it can be sent to the customer. If they have such pre-clearance system in place, then they can keep it until 2028. But member states who do not have such pre-clearance system in place, they cannot introduce a new pre-clearance system. So all of that will happen in 2024. And then a year later, in 2025, the focus will be on the OSS. So the OSS will be extended. It will also cover all B2C supplies of services, certain B2B supplies, and the transfer of stock. And because the transfer of stock will be covered by the OSS, it will no longer be possible to have a new transfer of stock under the so-called call of stock simplification. And then for the platforms in 2025, also 3 new rules will be introduced. So firstly, for platforms, it will become mandatory to use the import one-stop shop. Secondly, like Robert-Jan explained, for platforms in the passenger transport and short-term accommodation sectors, they will have to collect and remit VAT if the underlying suppliers are not registered for VAT. And lastly, for platforms, they will become deemed suppliers for the sales of goods if they facilitate those sales. And what also will happen in 2025 is that the domestic reverse charge mechanism will become mandatory for certain supplies. And then a year later, in 2026, the call of stock simplification will cease to exist. So I just said that from 2025 onwards, it will no longer be possible to have a new transfer under the call of stock simplification rules. And then from 2026 onwards, it will just cease to exist. So also the old transfers can no longer take place under these call of stock simplification rules. And then 2 years later, so that's the last year that it changes.
Some more time, 24, 25, 26, and then some more calm, some more time to make ready, then 2028
yes.
will come up.
So first we have steps of 1 year indeed, and then a step of 2 years. By then the European Commission feels like the companies and also the tax authorities, they will be ready to deal with e-invoicing in the EU DRR, and therefore for intra-EU B2B supplies, it will be mandatory to send an e-invoice, and also for transactions where the domestic reverse charge mechanism is mandatory. And all these transactions, they will have to be reported under the EU DRR. And because they will have to be reported under the EU DRR, the easy sales listing will no longer be needed. So it will just be replaced with the EU DRR and just cease to exist. And also the content of the invoices will change. So now they will have to include payment details, like what we discussed, the IBAN number, and also the due date, etc.
Yeah.
And the e-invoices have to be issued within 2 days after a transaction takes place. So it will no longer be possible to submit a summary invoice. And then lastly, for companies who already have not companies, but for countries who already have the DRR system in place, they will have to make sure that's in line with the EU DRR. So that's everything that will happen in a nutshell over the years. And yeah, we were wondering, we have another question for you guys. We were wondering which part of the ViDA proposal you think will benefit your business most. And is it e-invoicing and digital reporting requirements like Robert-Jan discussed? Is it the extension of the one-stop shop, or is it the extension of the platform fiction? And I'm quite curious, what do you think that people will answer on this question?
I cannot imagine that everyone is very looking forward to e-invoicing and digital reporting, or you have to be already doing business in the countries which have a similar system. But if you're a Dutch-based company, never dealt with these kind of responsibilities, I think you're not waiting on it because you think, oh, changes, help. No, I think the extension of the one-stop shop will be most beneficial because it will make companies doing international business even more accessible than it is now. So that is a very welcome change. And I think that most companies, of course, it's limited. So if you are an e-commerce business or you are indeed a person having some holiday homes, renting it out on platforms, you'll be happy that the responsibility will be shifted to the platform instead of yourself. So that could be a welcome change as well. But I think that the extension of the one-stop shop will be both beneficial for most of the companies.
Well, we received the results, and what's quite interesting is the extension of the one-stop shop wins. It's 46%, but the e-invoicing and digital reporting requirements is 40% of the voters.
Okay,
so that's quite a large part, and the platform is not quite a big part, but yeah.
Maybe the companies are very looking forward to the fact that they do not longer have to submit any easy sales listings. Yay! That's of course a possibility. No, but yeah, if you already are a sort of tech-driven company, and it has positive points, of course. You don't have to deal with paper invoices anymore, or all kind of printed PDF documents which you have to save. If everyone is sharing that information by a standard array in XML, and you have systems which can create and also read that data, then it's even possible to use that data already in your administration, because it's a fixed format. So if you receive an invoice, it can be automatically booked. At this stage, of course, there are already many OCR packaging companies who can read PDF invoices and add all that data automatically or semi-automatically in your bookkeeping system or ERP system. But if you use a standard format, then bookkeeping will become much easier as well. So of course, all the things will have some positive outcome, but maybe one a little bit more than the others.
Yeah, exactly. Yeah, right. Well, thank you all for answering the questions from our poll. Like stated, the ViDA proposal is from December last year. So there has been quite some input from member states, branch organizations, and as a matter of fact, a couple of days ago, countries were to submit their input on the ViDA proposal. It always takes some time before it will be published. But we have heard some noise from several member states. So Robert-Jan, can you tell us more about what's the consensus regarding the proposal?
Yes, of course. Normally, we are used to the fact that if these kind of proposals come up, you will have a much larger time frame when the first changes are going to be implemented. But now something gets introduced or proposed on the 8th of December 2022, and the first changes will already be applicable as of the 1st of January 2024. And while in principle many companies or professionals were stating it's a little bit too less time to get it implemented, the feeling is more and more that they will be ready, meaning that at least the legislation will be enforced unanimously by all the EU member states in the second half of 2023. But more and more member states are already thinking about the fact, okay, this could be beneficial, especially countries which do not have a digital reporting requirement or an e-invoicing requirement yet. I can also imagine countries like France or Belgium, who are going to introduce in 2024 some of these kind of things. They would think, okay, we put all the efforts into creating our own system, and now we have to amend it a few years later already. So that's definitely some change in that respect. But most of the EU member states are quite supportive about the changes, because it will mean that there will be less administrative burden for companies, at least at the end. Like the question already entails, which you raised about, will be applicable for all kind of companies, even if you are a self-employed person doing these kind of activities. I can imagine that kind of smaller companies, it will be an increase of the administrative burden, while for the larger companies it's going to be a decrease. But even in the Netherlands, where, in my opinion, I think they never thought about it, or maybe they thought about digital reporting requirements, but the IT systems were completely not ready to have this implemented at that stage. I can still remember the issue the Netherlands, together with Germany, had with the introduction of the one-stop shop. We were the only 2 member states stating, yeah, no, we're not ready to implement a one-stop shop as
Right.
the 1st of July 2021. We need at least until 2024, maybe 2026 to get it fixed. But somehow they were able to get it working. It's not really the way how we would like to see it working, by having to manually type in all the figures, but okay, it is possible. And also the Netherlands would say, okay, in 2028 we'll have the sufficient technical resources to make these changes working at that stage. And even the next couple of years, more and more EU member states are going to introduce similar systems, and not wait until, let's say, 2028. The whole situation will keep on moving. So also, especially in respect of the Netherlands, they will see that there is a positive long-term impact for companies, again, due to a reduction of the administrative burden, and it will also simplify trade in the EU, because you will have less compliance obligations, so to say. But yeah, companies need to be ready for these changes, and it will cost some money, at least, to arrange that you will have software capable to issue and receive that kind of invoices. And especially as in 2024, it is possible that the EU member state will already say, okay, we only accept XML invoices, real electronic invoices. I cannot imagine that they will do that as of the 1st of January 2024, but it is a possibility. Personally, I expect that they will introduce a sort of quite large period in which they will say, okay, we would accept XML invoices, but we also still allow PDF invoices for a couple of years to make companies more, to give them more time to become compliant and ready for those changes. And like I also stated before, for the especially the smaller companies, so companies dealing with the small entrepreneur scheme, they will have to deal with additional obligations and responsibilities, and that will definitely increase in a high administrative burden for them. Of course, for platforms, but we discussed already, they will definitely will see an increase in their obligations, and indeed, it was a good point from Igraine. They can avoid that by having a requirement that everyone is VAT registered. That is a possible change that will be introduced. But in general, member states, European Commission are quite positive in that respect, and they really foresee that there will be an unanimously agreement of this proposal. But you never know. We are with 27, 28 member states. They all need to agree, and if one country is not willing, then it will be delayed. And you also never know whether the proposal with the current plans will be introduced. You can also imagine that they will say, okay, we will put a lot of new things in the proposal, and if we at the end with 70% of the proposed amendments, we are already happy, because we are going to change the VAT system significantly, and if not everything is going to be introduced, okay, that is life. That's so.
It would still result in a major change.
Definitely, yeah.
And I think we come to the last point, because we talked a lot about ViDA, but the viewers at home or in the office, of course, want to make sure what they need to do to make sure they're ready.
There are some things. Of course, it is again still a proposal, but it's going to be introduced in some way. If it's not in 2024, it's going to be maybe in 2025. So there are some things which you can already do, of course. The importance of your data becomes even more important than now. At this stage, you have your bookkeeping data. You will provide it to your own bookkeeping or your VAT return or compliance team or to your service provider who creates a VAT from it. And a lot of tweaks or amendments can be made during that VAT return preparation phase. But if the e-invoicing and especially the digital reporting is going to be introduced, you have to submit the data in 2 days. So your data needs to be correct in your bookkeeping system or ERP system. You cannot submit incorrect data because that will result in penalties, question letters. You don't want that. So it's good to perform a review of your transaction types and how it is implemented in your bookkeeping or ERP system. Maybe look into the fact of how you can automate certain business processes, that your data is really already correct in your system. Of course, you need to get acquainted with the new e-invoicing legislation. So how will such an XML look like? Will our sales system or ERP system or bookkeeping system who creates those invoices be ready for that to receive or issue that type of invoices? Of course, you can already look into the fact whether some VAT registrations which companies currently have can be disregarded, that you can deregister due to the fact that those transactions which your company perform can be reported in the one-stop shop as of 2025. If you make use of platforms or platforms of facilitating the sales of your company, you can already look into the fact whether these changes as of 2025 will mean that you will no longer be responsible to remit the VAT for the platform. So you can make some steps in that as well. But yeah, like we stated a lot before, it is still a proposal. We're now in April. It's less than 5 months ago that the proposal was introduced. We will have to wait and see. But if we look into the recent developments and the feeling about the EU member states, there is definitely a significant chance that it will be introduced as 2024. But again, I don't want to make companies scared or something like that. There are things changing, but it will be slowly moving. I cannot imagine again that as of 2024, each country will say, okay, yeah, we don't accept any PDF invoices. It will be, I expect, a slowly moving process, but things are going to be changing.
Yeah, especially since governments need to make adjustments themselves. And
yeah, it will take time as well.
Yeah, and not all countries are as tech savvy
no.
as we know.
No.
Yeah, right. Well, thank you, Robert-Jan, for providing us with this overview. Let me check if there are any questions from the audience.
Yeah, we have potentially some time left still for some questions.
Yeah. So if anyone has some questions, feel free to ask them. Like I mentioned at the beginning of the webinar, the question that are asked will be sent out to everyone via Q&A, so you can always read it back at home. This webinar is also being recorded, and you are free to check in anytime you want, so you can review anything that we have told during this webinar. Our details are also on the screen, so if you have some more specific questions, feel free to reach out to us, and we will try to help you as best as possible. One request, we will send out a survey to you guys, which will soon pop up on the screen. It only takes a couple of minutes, but your feedback would be really appreciated. So yeah, take a couple of seconds from your time and help us some more so we can improve our webinar. I cannot see any questions that have appeared in the meantime. So I think
we must be very clear.
We must be very clear.
Or everyone is so baffled about all these changes.
Yeah, I can imagine. Exactly.
But like you stated before, takes a little bit more time. We will send out the information in an email together with the sheets, the Q&A, some additional information as well. Think about it, and if you feel that you would like to raise some questions or would like some assistance, we can already start, for example, investigating or reviewing these kind of changes? What will be the effects on these changes for your supply chain or your business? We can, of course, always assist with that as well.
Yes, exactly. Well, I think all that's left is to wish you a great evening or a great morning, of course, depending on from where you're viewing the webinar. And thank you for tuning in.
Yes, thank you very much.
Yes, thank you.